As of March 2025, US government debt has surged past $35 trillion. That's more than the combined national debts of Germany, Japan, the UK, and Canada. This isn't just a number, it's a major warning signal, because the strength of the US dollar is ultimately built on confidence, and that confidence depends on the belief that the US government can remain solvent. But as the US debt continues to climb rapidly, that confidence is now starting to come into question. We saw something similar happen with the British pound in the 1900s, which lost its global reserve status after World War II as the UK's debt levels exploded. By the late 1950s, the financial burden of war, money printing, and America's rising dominance led to a collapse in global confidence in the pound. We can see that in this chart showing the pound's share of global foreign exchange reserves, which fell sharply from around 80% in 1947 and continued to decline steadily in the years that followed. At the same time, the US dollar was gaining global recognition, slowly taking over international trade and reserves. By 1954, the US dollar had officially dethroned the British pound as the world's reserve currency. Fast forward to today, and now America is running trillion-dollar deficits, with dollar dominance starting to slip. Now you might be wondering where Bitcoin comes into all of this. Well, that's where the concept of de-dollarization comes in. We won't go too much into detail on it in this video, but in simple terms, de-dollarization is the slow, strategic shift away from the US dollar in global trade, finance, and reserves. While we're not fully there yet, the warning signs are hard to ignore. As the dollar's dominance fades, it creates a vacuum because there's no obvious successor right now. The Chinese yuan and euro both come with their own political risks, capital controls, and trust issues. That's why decentralized storeholds of value, like gold and Bitcoin, are moving to the front of the line. These assets are not controlled by any one country, and in a world where confidence in fiat currencies is breaking down, they're beginning to look like the most viable alternatives. Gold has always played that role, but now Bitcoin is offering a better and more modern alternative. Bitcoin isn't just a passive store of value. It's fast, borderless, not governed by any central bank, not pegged to any government, and trades 24/7 globally without capital controls. To put it in perspective, moving $1 billion worth of gold across borders can take weeks, require armored transport, security teams, and cost millions in logistics. With Bitcoin, that same $1 billion can be transferred from a phone or laptop in under an hour, for a fee of just a few dollars. That's why traders are beginning to treat Bitcoin not just as a risk asset, but as a macro instrument, a way to express views on currency strength and long-term monetary shifts.